Today we're going to be reviewing assumable mortgages, what they are, and what we do to help the process. So let's dive right in. We're going to review what is an assumable mortgage, why it matters, which loans are assumable, a couple things to be aware of on VA assumptions, the process, common pitfalls of why it might not make sense, the solutions, as well as our modern home lending concierge service to help with the process. So first off, what is an assumable mortgage? An assumable mortgage is a mortgage that can be transferred from the current owner of a home to a new buyer. Everything transfers. So the remaining balance, the interest rate, the payments, all the terms stay the same. Kind of think of it like you're picking up the mortgage where the owner left off. And the old owner is relinquished of the liability. So why does this matter? And when does it matter, more importantly? When market rates are higher now, let's say, versus when the assumable loan rate was received. So let's say market rates are 6%. These are not live rates, just for examples. Market rate 6, but someone has a 2% rate on their mortgage. An assumable mortgage can make a big deal because the seller has a competitive advantage. If you buy that specific home and you assume that mortgage, you're able to get that lower interest rate instead of the higher rates for that day. And as a buyer, that can be huge because you can get lower payments. So it doesn't always make sense, but depends on timing. So which loans are assumable? Commonly, government loans like FHA and VA loans are assumable. There are some other rare loans that are allowed to do this. Just a quick note, regular conventional loans backed by Fannie, Freddie are not, and the majority of jumbo loans aren't as well. Just a quick heads up for veteran and VA sellers that have a mortgage that is assumable. Keep in mind, if you have someone that's assuming your mortgage that is not a veteran, this could impact your future ability to buy because you don't get your VA entitlement restored. So be very careful if you are a veteran and you're letting a non-veteran take over your mortgage, or even if you're letting a veteran take over your mortgage, make sure they have their entitlement restored, which you can't do unless you're a veteran buyer. So here's a quick heads up on the process. Basically, once you're under contract on the home, you can request the current owner can request it from their servicer. So the person that you make payments to, the current owner, that's who's going to start the process. The processing fee is typically under $1,000. And then just a heads up, the new buyer does still have to qualify, so they can't just take over. And these loans are manually underwritten. Typically what that means is it's just a little tougher to qualify than the average loan. Not a big difference, but you must meet the same income, credit, and asset guidelines that you would if you were buying that home to start. A common pitfall that happens and why a lot of assumable mortgages don't get assumed is the down payment gap. So let's say you have someone buying a home for $500,000. The current owner has a $350,000 loan. The new buyer actually has to bridge that difference. Because they're taking over the mortgage at the exact same spot that the current owner is, they have to come up with that $150,000. Not every buyer can fit that exact same situation or same scenario. One solution is actually getting a second mortgage to help fund the gap. So basically you can take over the first mortgage and then you can get a second mortgage to help with some or a lot of your down payment. Now keep in mind these second mortgages will have higher rates, even higher rates than mortgages that are that day that you're qualifying for because they're in second position. So depending on how big this second mortgage is, it may or may not make sense to do an assumable mortgage versus just getting a regular new mortgage on the house. So just a quick heads up on what we do at Modern Home Lending with our assumable mortgage concierge. That one will help you look at the break even. So one, does it make sense to get a brand new mortgage on that house? Or does it make sense to take over the current mortgage, assume it, and either come up with cash if you have it, great, or possibly get a second mortgage to help bridge that gap. Now, sometimes if that second mortgage is too big, the rate is too high, it doesn't make sense, and it does make sense to get a brand new mortgage. If you are obtaining secondary financing, we have several lenders that we broker to that we can assist with getting that second mortgages. We'll help you find it. And if you are getting that secondary financing through us, with authorization from the seller, we will work with the first servicer to help streamline the process. As a mortgage broker, we deal with lenders all the time. We can help streamline the process versus real estate agents or buyer seller just reaching out. We know the paperwork, we know the ins and outs. We're happy to help streamline it, even though technically the servicer controls the whole process. At the end of the day, I am here to help. So I have my Calendly link on here. You can call me, you can email me whenever. If you're a real estate agent and marketing a listing, I'm always happy to talk about, does it make sense? Does it not make sense? If you're a buyer out there shopping, there are a lot of listings going into 2023 where we are right now because rates were so low in 2020 and 2021. So it definitely goes in ebbs and flows of when this might make sense. We're here to be a resource. Reach out anytime. Thank you.